Hello, everyone, and welcome to the Economics Design Podcast. My name is Ari Kimmelman. I'm a research analyst at Economics Design, and today I'm extraordinarily excited to be joined by our guest, Christopher Kaczmarczyk-Smith, game economist at Star Atlas. Star Atlas is one of the most anticipated Web3 games in development. It is an immersive space adventure and grand strategy MMO built in Unreal Engine 5 and will be sustained by a real virtual economy. It is built on the Solana blockchain and has a governance token Polis and an in-game token Atlas. There will also be a great white paper and economic paper, which can be found on the Star Atlas website for more information. So with that said, thank you for joining me today, Chris. It's great to have you here. Could you please introduce yourself?
Hi, yeah, it's great to be here. I'm Christopher Kaczmarczyk-Smith, as you just said. I got my PhD from Purdue University in economics, and pretty much during my PhD started working in the games industry with a heavy emphasis in Web3. So I worked at a couple of different startups, and now I'm at Star Atlas, which I'm really excited about because they are building, from what I can tell in my experience, probably one of the better, large Web3 video game economies out there.
Great. So for today's conversation, I would like to have a general discussion about Web3 economies while also referencing some aspects of Star Atlas's economy. Star Atlas is taking on a very difficult mission of creating a massive open economy compared to the closed economies of MMOs like EVE Online. So to start off the conversation, my first question is, from the perspective of as a game economist, what are some additional considerations of having an open economy compared to a closed one? And how does that apply in the context of Star Atlas's economy?
Yeah, this is a pretty popular topic nowadays. I think I've seen this coming up more and more. So the key being that a closed economy, it may have a hard currency, meaning you may be able to buy a currency in that game for with US dollar. The key is you can't take that back out, so you can't then turn your WoW gold into USD, or at least not directly. Whereas in an open economy, that's perfectly fine. So you can come in and go out as many times as you'd like, and always get your assets back into USD. So I think the answer to a lot of these questions nowadays are it depends, it depends, and I think that's just as true for this one. I've kind of written a small model on this. I don't know where I'm going to go with that model, but it basically says if there's a certain amount of trading volume or trading periods in your economy, then it might be beneficial to open up your economy because you can really take advantage of like those transaction fees. However, if you don't have a lot of trade in your economy and you don't have necessarily this like long tail, I guess, of market activity, there's no real reason for you to open up an economy. So I always compare like a single player linear game that ends like Elden Ring and something like World of Warcraft, right? Elden Ring does not make sense at all for it to have an open economy because there's really no real marketplace activity happening. It doesn't matter if I can sell my assets. Nobody's going to be willing to buy those on the other end. And those sales are going to happen very, very seldom. Whereas in WoW, tons of transactions are happening all the time. And you're probably going to sink thousands of hours into WoW. Whereas in a game like, Elden Ring is probably not a good example. I was going to say you don't spend thousands of hours, but some people spend thousands of hours in Elden Ring. But yeah, so it depends on the type of economy, the type of market. If you have a lot of trading happening over many, many periods, I think an open economy could be a really good idea.
Mm-hmm. Yeah, that makes sense. So I have a question about a game design feature in games. So a more common game design feature I'm seeing in games like Star Atlas, for example, as well as Shrapnel, is this gameplay where essentially another person earns for another person's losses. So these zero-sum situations in games. So Star Atlas, for example, someone stealing someone else's ship, for example. Could you explain why these zero-sum situations in games are relevant to creating sustainable virtual economies, and specifically what problems it solves?
Yeah, so the zero-sum framework is, I think, a really good framework to use. It's a framework that we use at Star Atlas. Obviously, and I'll talk about this in a little bit, but you've got emissions curves. You have the token emissions curves, which are kind of a different thing. I think a lot of people look at play to earn and they're like, or at least this is how, at least in the beginning, it was this way, where the emissions curve of the token was the earning mechanism. I think Nowadays, it's much more understood that a sustainable view is this zero sum concept where like, okay, actually, you're not earning from this arbitrary token emission schedule, which in my view, really simply put, I think is actually kind of a reward system for early adopters. Rather, you're earning from marketplace competitive behavior. So you could think of a really simple tournament where everybody pays $1 to get into the tournament and there's one winner. Everybody puts forth a certain amount of effort, and whoever put the most effort in or whatever ends up winning the tournament. They get all $5, or they get $5, and then the other $5 goes to the house or the game creator in this case. So that's kind of this really simple tournament example where it's perfectly sustainable because nothing comes out that didn't go in originally. This idea that value can be generated just because people believe in something is obviously under serious scrutiny nowadays, and it's a really good thing that it is. We need to understand that the value comes from people performing and people behaving in a competitive environment just the way that they do in a labor market. That's kind of, I agree with the sentiment that a zero-sum game is probably the way to go. I don't know if I can think of a good example of a game that's not zero-sum that I think would be sustainable in the long term. To go back to emissions curves, though, there's this token emission curve in almost a lot of these games have emissions curves where you stake some sort of asset, some sort of NFT, or you perform some sort of behavior and you get the token back from an emissions curve. So there's this big giant pot of the token and it gets distributed to the players. That was kind of the original concept for like a play to earn, or one of the original concepts, where you were earning this currency that could then be sold on a secondary marketplace because it had value. I really do see this as a reward system for early adopters. For example, I like to think of Kickstarter as an example. You've got a whole bunch of people who believe in a product. Let's say you've got 100 people who end up kickstarting a project and they spend $100 each. If later on it's found out that product is worth a whole bunch of money, and because there's so much demand for it, so all of a sudden instead of $100, the demand is up, and the price of the product is it's $200 because it's a rare game. Everybody loves it. That's almost how I see kind of this initial vesting in the emissions, the token emissions curve.
Or what game genres do you believe having a cryptocurrency as an in-game or governance token makes sense? And if you could explain why it makes sense in the context of Star Atlas.
Yeah. So I think I've always been of the belief that you couldn't probably figure out how to do any game economy without a token, without a blockchain token, without an actual like digital token. You could have this in-game currency, but if you're building on the blockchain, you might as well have it as a cryptocurrency. Now, I think a game that does no tokens really well is something like Skyweaver. I believe they use like USDC or USDT or something like that. So they don't actually have a token, and it works really well for them. I think in a market, so as you can imagine, the prime example I think of someone who would want a tokenized currency is something like Star Atlas, something where an MMORPG, where the currency is very important. Markets are extremely important, right? The Skyweaver market is not that interesting, right? You have pretty much this very small bandwidth, which cards are trading always within, because there's this indirect price control through the card destruction program. Whereas in something like Star Atlas, one of the gameplay mechanics is a market. And in fact, actually, one of my not a colleague from Star Atlas, but Eric Guan at Superlayer, he's written a little article about markets and what makes markets fun. So I think that if you're a game where the market matters, you probably want some sort of currency. And if you're a game that wants to have an open economy, that currency should probably be a tokenized currency or a cryptocurrency. So I think it all depends on what you want as the game developer and the type of game. In terms of the governance token, and we might get into this a little bit more later, but a governance token certainly can have an important role within a robust economy or just any robust game ecosystem. But we'll talk more about that later, I think, probably.
Yeah, sure. Interesting. So my next question here is, a common question I hear is whether a single or a dual token model is better for a game. So from my perspective, it's more or less true that either of these models can work, but there appear to be trade-offs. So for example, there's often less liquidity available if you have two tokens compared to one token. So could you share your perspective in what context it might make sense to have a single token model versus a dual token model?
Yeah, so this is pretty much taking what I was talking about before. I think that the common criticism is that there's like this liquidity division problem where if you have two tokens, some of the liquidity is going towards one token and some of it is going to another. I don't really buy that argument because if we assume that that's true, then there's also liquidity being stolen for the NFTs. So if you have assets, you could argue that there's liquidity being stolen for those assets. As long as the two tokens, right, as long as this governance token and this utility token are very distinct and have completely different roles, a two-token model is perfectly fine and it makes sense, right? If your governance token is just used as a utility token, then definitely you're spreading wealth around that doesn't need to be spread around. But if we look at it, let's compare the utility token to an NFT. Well, the utility token, it's clear what its objective is. It's clear that it's a completely different object than an NFT. They serve not the same purpose. So you can't argue that you're splitting your liquidity across these assets. I think of the governance token in the same way. In fact, I really see the governance token as kind of this like political NFT, or I guess, it's fungible. So it's in that way, it's not an NFT, but it is really almost a gameplay mechanic. It's a government mechanic. And in the Star Atlas ecosystem, for example, we see dramatically different behavior between the two currencies, right? People, if Polis didn't exist, for example, they wouldn't hold more Atlas. They would hold more ships. Same goes for Atlas. If Atlas didn't exist, they would swap into probably Sol or something like that. So at least in our ecosystem, players are doing very different things with these different currencies. They're investing, or they're vesting, or they're staking, whatever the term you want to use, Polis, and they're using Atlas to reacquire new ships, and they're doing a whole bunch of interesting things. But the two currencies behave quite differently. We see different price behavior on the secondary market, but we also see players literally doing things with their currency. We can see exactly where they got their Polis from, where they got their Atlas from, and where it went. And they go to totally different places, which I think is super fascinating. If there were substitutes in this argument where liquidity is divided among the assets, we'd assume that they're just substitutes. I either hold Polis or I either hold Atlas, but that's not the case. So I think it's actually, at least for our environment, especially since we do, our slogan, Michael Wagner says it all the time, power to the people. That's what we ultimately want to do is have this DAO that has, significant ability to influence the environment, and it's controlled by the players. I don't really know how you would do that without some sort of voting mechanism, and it just so happens that Polis is a really good way to do that. We see extraordinary staking of Polis in our Polis locking program. People have just an enormous amount of voting power, which is really kind of startling. Even during the FTX fiasco, we just saw such strong behavior in our marketplace for our tokens. Not only were people swapping into our tokens and kind of almost coming to us, they were also putting these tokens towards these voting programs, which I thought was just kind of miraculous, all things considered. Yeah, so I think if you're a game that doesn't need a governance token and it serves no purpose, it's a waste of space. And yes, it is it's needlessly soaking up people's capital, and we don't want that. So I think there's an argument for all three models, right? 0 tokens, 1 tokens, 2 token. Yeah, that's kind of my long-winded answer, I guess.
Mm-hmm. No, I think that makes perfect sense, and I completely agree. I'd love to move on to the topic of virtual assets. So could you please explain how virtual assets like ships get their value and how people should think about factors, whether it's the utility of the asset, the price due to speculation, that all play a role in determining this price of a virtual good or virtual asset?
Yeah, I could literally talk about this for hours. I've spent many hours talking about this with academics and industry people. I'll I know I'm here kind of to talk about Star Atlas, but I did write my dissertation. One of the chapters in my dissertation was on like the value of a digital asset. Where does the value of a digital asset come from? In the real the context of the paper, we're talking about competition among digital media companies, whether it's a video game company or a social media company. But obviously, as you imagine, NFTs come up. So we address NFTs in the paper. And we claim that it comes from three things. One of them is the issuance of the token. This is basically scarcity of the actual asset itself. The more scarce it is, the higher the nominal value will be, right? It doesn't mean that the thing is more valuable. It just means that the per price or the per asset price is going to be a little bit higher. Quantity theory of money, very straightforward. The other thing is the number of people in the market. This is also kind of if you were to look at like market literature or something like that, trying to think of a good example of this literature. I can't think of anything off the top of my head, but you just see that the more volume in the marketplace, the more interesting price, the more the price will appreciate if there's a lot of volume, a lot of buy side volume. And then the other thing, the final thing, and the most important thing is the quality of the asset. And the quality of the asset is very ambiguous. And I really like to think of this in the context of the hedonic price literature. This is primarily looks at real estate, where they take a huge vector of characteristics for a house, for example, and they say, how do each of the components in this vector impact the price of the house? So what is an additional square foot of land or a square foot of house space or an additional, acre of land, what does that do to the price of the real estate? It's a really straightforward model, actually, and I like to think of the value of NFTs in this way, right? What are the different components? What's the vector of components that go into determining the price of that asset, or could possibly determine the price of that asset? Because some things don't impact the price, some things do impact the price in a causal way, and studying those things. So studying, what is the impact of the player base on the price? Obviously, that's not a part of this quality thing, but you could think of, what is the color of the asset? How does that impact the price? Very, very, you could go anywhere with this. So to me, the price of an asset, a digital asset, comes in the same way that the price of a real asset does. The key is you want to make sure that there's no bubble. There are bubbles in the real, it's like real estate is the most real physical thing you can imagine, and yet there are still bubbles. So I think that it's incorrect to think that digital assets don't have value just because there are bubbles in this market right now. And there certainly are. There have been huge bubbles, but the same thing happened in the dot-com boom. So I think it's kind of a bit of a cop-out answer to say, well, these things don't have value because their prices keep crashing. It's like, no, their prices haven't been realized yet. No, maybe the market hasn't found the efficient price. So I think prices are, the market for digital assets can certainly support positive prices. I think it's just a question of the nominal value, not the relative value.
Mm-hmm. That's interesting. One of the things that I personally have to tackle on a day-to-day is if I'm speaking to a friend of mine or a family member, I have to explain why people, especially of our generation, give value to these virtual assets if they're not tangible and they're not something we can hold. And I think this literature, this idea, and it's discussed also in Design and Analysis of Virtual Economies by, Ted Castronova. It's a very interesting idea because psychologically speaking, we essentially give the same value of these virtual assets, as you mentioned, to real assets within the world we live in. And so my perspective on the subject is, especially as these virtual economies grow, we're going to be seeing a lot more value being held by these virtual assets in a way we haven't seen before, typically in these other MMOs. So I always think this is an interesting idea and an interesting projection that might happen through NFT technology over the next couple of years.
Yeah. When I first started off in this industry, I always used to say, well, if a real yacht costs $2 million, then a digital yacht should never cost $2 million. But as I, got deeper into the industry, I realized, okay, there's a lot more that goes into these digital assets than just the physical space, right? There's the physicality of the object. I can go into Decentraland or for example Star Atlas. I can go into the showroom and I can wander around and I can look at my beautiful ships and I can fly them around. There's value there, and that's, I think, the value that people understand who are coming from a traditional space. They're like, oh, okay, I could see you wanting to spend a couple $100 on this game to play around. But you speak of kind of this almost orders of magnitude more value, where a layperson might go, well, how can that thing possibly be worth that much? Well, I always refer people to the casino industry, and maybe that's not the best analogy, but you can imagine trying to, if people didn't know what casinos were and you went up to a person on the street and tried to explain it to them and say, hey, go take your $10,000 and go play at the casino, they would look at you like you're crazy. But there's this, phenomenal, people love the chance of being rich, even if that's a tiny probability. And I'm not saying that these markets are I don't want to draw an analogy between the two types of markets, but my point is, what people are willing to spend money on is very, very difficult to quantify. And I think it's naive to try to say, well, this should objectively be cheaper because the physical version in the real world is more expensive. Well, there are other components here, right? You can use that asset in many different ways that you couldn't use the physical asset for. You could loan it out to someone. Well, okay, you can loan a physical asset, but you can, stake it in a program. You can break it into parts and sell it piecemeal. You can do a whole bunch of interesting things, both, from a financial point of view, like I just mentioned, but also potentially in a very, cutthroat kind of competitive scene, maybe like a poker tournament almost, except for it's racing around spaceships.
Yeah, I think that's interesting. I want to go back to Star Atlas here and ask, what are some of the challenges working on the Star Atlas economy, and how you and the team plan on dealing with economic changes as players join and leave the game in massive waves?
Yeah, this is, obviously, I think any game economist working in this space right now is probably kept up at night thinking about all the terrible things that could possibly happen in their economy. In terms of challenges, obviously there are pretty boring, mundane challenges that we face every day in terms of, data, for example. Blockchain data is all transactional. So the databases that we have to deal with are more complicated than like a traditional video game company, where you get kind of this really nice panel data set that comes out of your directly from your environment, whereas we have to read the blockchain, we got to interpret, we have to interpret things, make sure that we understand where things are coming from and where they're going. So there's that challenge to get deeper in terms of 10,000 players show up tomorrow and 10,000 players leave tomorrow, and kind of these bigger economic changes are going to happen within the ecosystem. The first, we are always, especially within our community, the econ team is always saying, we've got 30 levers. And that's true. We have 30, parameters within our economic framework that we can adjust to change economic variables in the game. How much of this is spawning? How much of this does it take to make one of those? How much are you burning of this asset in order to fly around? So we've got all these levers that we can adjust to dramatically or, in a very small way, impact the entire economy. So that's kind of, it did blow my mind early on when I was working with a couple of, with some projects early on in my career, just how little control some of these projects have over their economy, how few levers, for example, I put levers in quotes, how few parameters they have in place in order to control their economy. And I think it's becoming more common rather than have a spreadsheet with a bunch of numbers that were cherry picked, having a function that defines, how those numbers spit out, right? So you just change one number in the function in order to get all the numbers to spill out properly. So there's that economic control, or I guess mechanical control over the economy. But then there's also the player behavior. And, this is why you create the levers, right? If here's something that's really interesting about game economics is that point of game economy design is to make sure that the game is perfectly balanced or mathematically balanced, right? Everything comes out smoothly. You use linear algebra to make sure that, all the values make sense. 2 of these equals 1 of those. And at the end of the day, everything, lines up nicely in terms of the player progressing through your environment. That said, that all goes out the door if people start to only participate in one type of activity and they're neglecting another part of the economy. I always talk to our team about this concept of so for example, in the Star Atlas economy or ecosystem, we have a product called Sage, Star Atlas Golden Era. And it's kind of our way of creating the economy separately from the UE5 development. So we have the UE5 development, which is all on chain and it's all very, very beautiful. But in terms of the actual economic framework, we're kind of building that in Sage, and then we'll merge the two together at a later date. So when we're developing the economy for Sage, I always, I always run a bunch of different simulations with my data, assuming different types of behavior. So I have this model that I know how mechanically it will work. And so I put in a kind of a player profile and I say, okay, I think this person's going to do this, that, and the other. What does the outcome look like? Well, if they're focusing on, for example, only, mining for this particular type of asset, then there's going to be there's going to be a shortage of all the other assets. So the idea is that, everything balances out if everybody's doing what they're supposed to be doing, but shortages, surpluses, these types of things happen. I think that's cool. I think that's one of the things I love about MMORPGs, is that you have these economic, I guess you could call them disequilibria, but basically this friction that's constantly forcing people to have to, or to want to be financially incentivized to go do something else that they otherwise wouldn't have done. Mining for iron ore is all of a sudden just super profitable. So I'm going to go stop mining for organics and I'm going to go start mining for iron ore, or participate in some other game loop. These economies are extremely fluid. And I think, one of the things that I do love about working at Star Atlas is just how seriously the econ department is taken. We're pretty, I think we're a mid-sized department, and that's better than a lot of projects in this space can say. And I personally think there's something to be said for having an in-house game economist, at least, or at least somebody who really intimately understands the economy. It's the coolest job in the world, and we face a lot of the same problems that traditional game companies face, and a whole bunch of other ones that only Web3 companies face, and we deal with them in stride as they come.
Mm-hmm. One of the things that came to mind when you were explaining that was the fact that these virtual economies are going to have a whole lot of money going into them as Star Atlas continues to develop and people participate in the ecosystem. I think it'll be interesting to see how government legislation plays a role in this, because in some senses, game economists are going to have a lot of power to be able to influence and manipulate how potentially billions of dollars or many millions of dollars flow within these virtual economies. So this is always a point that I have in the back of my head to see, okay, how is this going to play out in practice over the next couple of years? And we'll see how tightly strained game economists come as this legislation comes about.
Yeah, I mean, legislation is a huge topic, and it's really important. I gave a talk at the American Bar Foundation or American Bar Association tax conference this last fall. And that was kind of the main topic of discussion was with respect to NFTs in particular. Are these things securities? Should the company who's issuing these assets be considered a brokerage? And I won't get into it now, but I think I personally try to look at it from so if you abstract away the market layer, obviously this is no different than trading card games, selling cards to someone, and then they go and they do their activity on the secondary market. It's really the secondary market that causes all the problems, right? This idea that the players can within the game ecosystem go and trade on a secondary market, and the fees usually go to like a DAO or something like that that's controlled by the company. I think it's too early to tell to see how legislation will shake out. I think that if these things are considered securities, we'll have some serious issues that we need to come to terms with. I don't think it'll change the job of a game economist. I don't think that we'll have to think about our job very much differently than we already do. I like to think all of a sudden, instead of selling a game, we'll be selling a game that's also like a house. So I don't know. It is a very, very complicated topic, and I'm not super up to date on my legislation, so I'll stop talking.
Okay, let's move on to the next question then. So what do you think are the most important factors that will determine whether Web3 games will succeed 5 to 10 years from now?
So when you say Web3 games, you mean like as a whole, or like as a genre, or just specifically individual projects? Like what's going to make the one project beat out another project?
I would say across the board, so all projects.
So I think the popular thing to say nowadays is, Web3 games will succeed when Web2 people don't realize they're playing a Web3 game. So there are a whole bunch of projects now, even, and Star Atlas included, that are trying to figure out, how do we reach a broader audience? How do we introduce these traditionally Web2 people into the Web3 ecosystem without them having to go through a million steps to get into a game? And I think what's kind of a cool feature of a bear market is that you start to realize you start to be able to focus on some of these other projects that were put on the back burner during the bull market. So now we're like, okay, we're coming up with some pretty clever ideas of how to introduce people into Web3 games. So I've talked to a couple of different people on different projects whose main goal is to basically just integrate Web3 into Web2 games without anybody knowing at the end of the day. You own all these assets. Do you care that they're NFTs? Do you care that they're on a blockchain? Not really, as long as the experience is seamless. And I think to me that is truly probably the biggest answer, is whether or not we can make Web3 games accessible to the general public. I'm very averse to personally. I'm very averse to playing any games that make me have to sign up, right? Oh my gosh, I've got to sign up for your, if I'm on my Xbox and I have to make an account, I usually just turn the game off and uninstall it. It's like people are lazy and and they should be. So I think that's probably the biggest obstacle. It's something that everybody's pointing out, and it's something that everybody's working on. So I think we'll get there. In terms of sustainability and creating games that people actually want to play, right? Like, not everybody wants to enter into this kind of crazy casino or something like that, where they have to buy in and there's all this crazy transactions going on. I'm still a firm believer. A common sentiment is blockchain games, or blockchain in general, is a problem in seek of a solution. No, a solution in seek of a problem, right? It's like, we have this technology and we decided that we're just going to start using it, and we never thought about whether we should. I actually think that blockchain technology, we see it in under other industries, right? Logistics, healthcare, even at the federal level, we see these technology being used by everybody. It's a very efficient technology, blockchain technology. It's very good at getting things to move from one place to the other in a very, very digital things moving from one place to the other in a very official and quick way. I think that in and of itself will provide a massive reduction in the marginal cost of operating. So a potential reduction in the cost of producing a large MMORPG, for example. I think that in and of itself is enough for me to think that this technology is at least going to stick around. I think that if you have some of these smart, you combine AI with a decentralized app or something like that. And you could start to get some seriously high-powered, extremely efficient tools for designing games, designing businesses. I just really find it hard to believe that this technology would die out and not become useful in some capacity to at least curb those marginal costs, like I was saying.
I want to move on to the topic of the metaverse, the buzzword, the metaverse. So what do you foresee as being the future of virtual economies, as we were discussing earlier? And if at all that relates to a potential metaverse?
Yeah, I mean, this is probably, I'm always hesitant to, this is a tough one. Metaverse is tough because everybody thinks of a metaverse as, interoperability is the word that comes to mind, right? Like everything, I can take a sword from Minecraft and put it into WoW. I think that's like a classic example. And, from a technological point of view, unless there's some sort of coordination between these firms, and right now there's no incentive for people to be coordinated in this capacity, I do not see this interoperable future. The reality is, if one company gets to be the metaverse, that's kind of for one, it defeats the purpose of decentralization, right? And for two, there's probably a huge issue with that. We don't want every single company to be owned, or we don't want every single video game to be owned by the same parent company. Competition, it induces variety. It induces creativity. I think that's a pretty, some people would maybe push back on that, but that's in econ, at least, that's a pretty common sentiment. So In terms of a metaverse, I really, really doubt it. I do think that brands are going to start having their own metaverses. I think that there are going to be metaverse companies, the same way that you have social media websites, right? Like you have Twitter, you have LinkedIn, you have Instagram, and all these different types of environments where millions of people, millions can come and enjoy each other's presence and do a whole bunch of really crazy things. There's advertising. There's all of these are metaverses. Like these are metaverses in my opinion. And I think that when we talk about the metaverse in this industry, it really just means like introducing video games into the metaverse and video gamifying the metaverse. And Decentraland and Sandbox have started to do that. They actually have products. I think it's going to take more than like maybe perhaps what could be considered these boring metaverses. I think obviously I work for Star Atlas, so I'm gonna brag, but I do think that a rich lore-driven economy, a lore-driven game, a story-driven with beautiful architecture, beautiful assets, is actually probably a really good place to start something like this, where if I have a choice between a metaverse where I'm interacting with stuff physically and I have to walk around and Facebook or Twitter, unless that thing is providing me with something that I find just beautiful, I'm going to opt for the easier to use solution, right? Like if there was an Elden Ring metaverse, or, for example, if, 5 years from now when the Star Atlas like full metaverse is out, I'm going to go to that. That's much more tempting because it's beautiful and it's intriguing. It's interesting to me. I think metaverses have existed for a long time. I think there are many of them. I think it's just a fancy way of us saying, digital social space versus, like the physical metaverse is like the bar or, a brewery or like the town square. You go out and hang out with people and there's a whole bunch of different options that you have that are produced by different people.
No, I completely agree. And I think that the emergence of these virtual worlds, so to speak, will definitely take place through the MMORPGs like Star Atlas, as you just mentioned. So last question for today to wrap up the conversation. What do you believe are some of the most important considerations based on your academic background that teams should know about gaming economies in general? And, feel free to be specific or broad about that.
Yeah. So, the first thing that always comes to my mind is data. I don't think there are enough data-driven or data, knowledgeable people in the game economist role in the Web3 industry. So I found, and I don't even need to do a criticism. There are plenty of people who are really good at this, but I want to emphasize how important it is to understand data, not just be able to work with an Excel spreadsheet, but be able to do actual hardcore data analysis, with some sort of programming language, with some sort of maybe statistical software, be able to format that data, be able to understand that data, and be able to draw useful conclusions from that data. Though that's probably the number one thing in my view that game economy, because it's so much more important in these Web3 economies where the financial assets are so to speak on the line, and the fact that we now have so much rich data because the blockchain records it all for us. I think it's really an incredible. I don't think that we quite understand just how powerful seeing every single transaction that occurs in the blockchain is. And I think that tools like Dune and Flipside are just absolutely incredible. At Star Atlas, we're developing, all sorts of different tools. But, in particular, our econ team, we have Steven Sabol, who's our another director of economy. He's taking everything very seriously. He's taking it, this is a real economy as far as he's concerned. And it is a real economy, but, he used to work at the Fed and he takes these things extremely seriously. He knows data like the back of his hand. And I'm not sure, I'm not sure how, I don't know how many other people I'd be willing to trust with that kind of a hardcore data analysis to understand when there's an issue with the data or what to do with data once you have it. So that's like my data spiel. As an econ PhD, you get a lot of experience with data analysis. Like that's 99% of what you do is data analysis, and the other 1% is everything else. In terms of practical kind of like what did I learn in my academic background, there are a lot of micro and macro concepts that I think that people could have in their back pocket. Like I would just go and study the information economics literature. So this is, really just studying how do people update their beliefs? How do people understand an economic game given the set of information that they have? So it's a literature that's all about probabilities, uncertainty, and making decisions under uncertainty. Information economics is just like a super powerful tool to have in your back pocket. Obviously, game economics, I think game theory is, I don't know how much people literally just go and study economic games. With these two different, literatures, you can you can do some really fantastic stuff in terms of programming. I think it's really important for game economists to be able to simulate their economies to some degree, whether it's a Monte Carlo simulation where you're just repeating a process over and over again, or you're actually going in and creating an intelligent optimizing agent that's behaving according to some sort of strategy. I think that's super important, and it's very difficult to do such programming without information economics and game theoretic knowledge. And then obviously this isn't really to do with knowing about game economies, but having programming skills is just so important, and it's something that I recommend to everybody.
Great. Okay. Thank you for that answer, and thank you for joining me on the podcast today. It was great to have you, Chris.
Yeah, thank you so much. It was great to be here, and anybody who's listening, obviously go check out. We just released our version 2 of the showroom for the Star Atlas Unreal Engine 5 kind of demo. It looks absolutely incredible. You can race around in your spaceship. So go check that out. Sage should be releasing sometime early next year, which will be the real fun stuff, which is the economics, which the econ team is really excited about. And then on a more personal note, I've recently started a podcast with Philip Black and Eric Guan. So if you want to check that out, that's the Game Economist cast as well. So yeah, thank you guys so much for having me.
Great. Thanks, Chris.